that. Meanwhile, let's talk about the big IPO that opens today. Lenskart's near 7,300 crore rupee IPO opens for subscription today. It's open today up until November 4th. The price band 382 to 402. The issue size nearly 7-8 crores, of which fresh is 2150, and the OFS by promoters and investors is close to 5,100 crores as well. What the company is seeking for what it is giving you is a market cap of nearly 69,241 crores. And at the same time, the promoter stake comes down from closer to 20% to closer to 18%. The anchor book is something to go by. There has been strong demand by the institutional anchors. 3268 crores raised by nearly 150 investors, 35% of that having gone to 21 domestic mutual funds, which include the likes of SBI, MF, HDFC, ICICI Pru, among others. And the global participants, we have the likes of Government of Singapore, Norway Pension Fund, New World, Fidelity, T-Rove, etc. What is it that the company is raising money for? 273 crores goes towards setting up their new company-owned, company-operated stores. 591 crore rupees for expenditure around lease, license and rent agreements. And investment in technology is about 213 crores. It's a D2C company that designs and sells a wide range of eyewear products. You would have known about it because of the near 2,150 stores that they have in every nook and cranny of the country, and 40% of their revenue that comes in from outside of India as well. If you look at their financials, last year they did revenues of 6,650 crores, of which nearly 40% came in from overseas markets, Southeast Asian markets, margins of really 15% and a net profit of 300 crores. The first quarter of this year, the revenue was 1,900 crores, EBITDA margins of almost 18% and a profit of 61 crores. A strong business which is 2.5 times bigger than its nearest competitor in India, and at the same time, we have seen a fairly widespread and wide recognized brand and a good back-end integration as well. But all of that at what price? 10.5 times FY25 price to sales, 234 times FY25 price to earnings. So this is exactly the question that I asked the management, and this is what they had to say. In the secondary market is the valuation that matters the most. And I'm looking at your numbers. You're seeking a post-money valuation for almost 70,000 crores in terms of market cap. Just basis trailing numbers, you are offered at a little over 230 times price to earnings, nearly 10.5 times sales. Even if you triple your profits from current levels over the next few years, you would be at around 70 times, right? So what I'm trying to understand is how much value do you think personally you've left on the table for people who are entering right now?
I would say that firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right?
And now increasingly shareholder as well.
Yes. And the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal.
Okay, so that's the management's justification to that very pointed question that Mangalam asked, saying, what about the asking price? Is it fair? Does it leave anything on the table or not? We'll keep discussing this through the course of the day.